afternoon, everybody. My name's Sue Moul and I work with Headstar as a Portfolio Finance Director. And I'd like to welcome everybody to the Headstar Private Equity Unpacked webinar. And I'm delighted to be joined today by Tavia Sparks of Foresight Private Equity. Tavia, thank you so much for agreeing to speak with us all today about how to build an investable business. I've seen parts of Tavia's presentation before and it's really interesting and hopefully you'll ask a lot of questions. If you do have questions, we're going to pick those up at the end. So if you can put those in the chat function, that would be very helpful. Just by way of introduction then, Tavia is Investment Director at Foresight. She's the Investment Director based in the Leeds office. Prior to Foresight, Tavia worked for Santander Growth Capital, and she holds an undergraduate degree in economics from York University and is a member of the Chartered Institute of Bankers, so quite a broad background in finance. I am going to share Tavia's slides and we'll get started.
Great to meet you virtually. And yeah, thanks for joining. And any questions, please feel free to shout out. So yeah, as Sue said, I'm one of the investment directors at Foresight. So I've been at Foresight now for just over a couple of years. We launched the Yorkshire and North East Fund in July 22. But Foresight has been around much longer, since the 80s. Very much a regional investor at its heart. And yeah, so I joined 2 years ago, and as Sue said, my background's a combination of private equity and corporate banking, really, across Yorkshire and London. So if you can click on, what I was going to do was just talk to you a bit about who we are, I guess, and what we do. And then just take a step back, really, and think about kind of private equity and how it can be considered as an option when you're having your conversations with owners, when they're thinking about strategic options or fundraising. So in terms of Foresight, yeah, we are very much a regional investor at heart. I'm going to have 12 offices across the UK and Ireland. We are listed on the stock exchange, so we're FTSE 250 with about 13 billion of assets under management. And about 1.5 of those, 1.5 billion is in private equity, with the balance in infrastructure and renewables. And that 1.5 and the deal volume that we kind of complete on a frequent basis puts us as one of the most active investors in high growing SMEs across the UK. So we are an SME investor and have been around since the 80s. So we have a portfolio now of just over 200 companies across the UK. We're sector agnostic, and we can invest up to 15 million across a broad range of sectors, deal types, and kind of age of business profile. And I'll come on to talk about that in a bit more detail as we go through. We have a really broad mandate in terms of the funds that we have under management. So broadly, half of our funds are venture capital trust funds. So earlier stage investments into growth capital for businesses. So to use to kind of invest in the business itself. And then the other half are kind of made up of local government pension schemes, combined authority money, etc. So here in Leeds, so we have an office in Leeds and an office in Newcastle, which comprises effectively the home of our Yorkshire and North East team. So we're a team of 5. There are 60 of us across the UK and 5 on the ground here in Yorkshire and the North East. And yeah, so we manage, for example, funds from the West Yorkshire Combined Authority, as well as Tyne and Way Pension Fund, Teesside Pension Fund, British Business Investments, etc. We have really flexible capital in the sense of we can work with quite young, high growth businesses all the way through to really quite mature, profitable, steady businesses too. So last year we made 21 new investments, and we had 11 successful exits, which is great. We opened 3 new offices and we raised 3 new funds. And so far this year, we I think are on a similar track record. And for example, so far this year across Yorkshire and the North East, we've invested in 5 new businesses so far, which I'll talk about in a bit. And we've got a leading track record in terms of funds under management exits, and we've returned kind of 3.5 times money on average on all deals that we've exited since 2010, which puts us in upper quartile in terms of fund to performance. So if we can, so private equity and kind of how can it be deployed? What traits are we looking for when we're talking to owners, advisors? So I spend lots of my time having coffee with advisors or people like Sue to find out what's going on in a portfolio, with non-execs, with lawyers, with accountants, and that's kind of across the whole region, not just in Leeds and Newcastle, but, you know, Teesside, Hull, Harrogate, Sheffield, everywhere. And there are lots of ways that we can kind of look at what an investable business would look like for private equity. And certainly, I think there's a great opportunity when you're hopefully having those conversations with the businesses that you're working with or that you know, the owners, etc. So we're always looking for kind of high quality revenue streams. And some of this stuff's very, obviously is quite obvious in a way, but the metrics I think sometimes can be wider than perhaps might have been initially envisaged for private equity. Because actually, kind of taking a further step back, I think the majority of private equity that makes its way into the region, over 90% is growth capital. So that's investments into a business. But actually, you know, we have, 120 million across Yorkshire and the North East alone, which can be used for replacement capital. So for things like management buyouts and management buy-ins too. So what are we looking for, or what's an investor looking for? So that's high quality revenue streams. So that's even kind of distribution of customers, no over-reliance, repeating, recurring, strong margins, which talks to kind of quality of proposition, good cash conversion. In terms of growth capital, so for us at Foresight, we're probably looking at revenue in excess of 1 million, but not necessarily profitable. So you can be loss-making at EBITDA. So if a business is growing and wanting to invest in sales and marketing, tech, it's a restaurant chain and wanting to potentially open new sites, or it's a bar chain, you know, all of these things in terms of growth capital into the business can be quite small. So yeah, for us, certainly can be not profitable at that stage for certain, you know, particularly for tech deals, because, you know, you tend to find that all profits reinvested to drive tomorrow's revenue growth. For buyouts or management buy-ins or equity release deals, EBITDA tends to, you know, need a degree of scale. And for that, for us, probably looking at about 750,000 of EBITDA upwards. It's important that there's a growth. These are growing SMEs with growth opportunities to come. So how can the business be scaled? So is it taking something that's regional to a national proposition or national to international? Is it investing in a different vertical? If it's a tech business, you know, is it serving one sector of the market? And actually, if they raise money, could they invest and pivot slightly and widen their reach? Or have they invested in a tech platform or any sort of kind of marketing proposition? And actually, you know, is it sales and marketing team that needs investment to grow revenue? Management teams. I think one thing that's quite unique to Foresight is that we can and we frequently work with business owners to bolster the senior teams, and we will, and we frequently again will invest in what are effectively retirement sales. So Eden Mobility, for example, is an investment. So that's a mobility retailer, and we invested in that business in the first half of this year. Founded by two guys about 20 years ago, hadn't built a succession plan. Great business, doing probably 2 to 3 million of EBITDA, growing nicely, great market trend, really good customer relationships and propositions, but they hadn't built a team. So what we did was we brought the CEO So we found a chief exec, we found a finance director, and we found a chair. And we found basically the full team, which enabled the founders to step back. They rolled a bit of the value into the next deal through their choice, but actually they're no longer operational in the business. And that business, I think, has opened about 3 new sites already under our stewardship, and is going from strength to strength. RS Industrial Services is another good example where we brought the CEO and the FD and the chair again to unlock the deal. So there are lots of, I think, where lots of people might think actually, if it's a fundraise or a potential exit, you know, and there's no kind of real breadth or depth to the senior management team, it's not necessarily a barrier to doing a deal. It's just something that, you know, we help and we can, you know, work with recruiters, the wider portfolio, etc., to kind of try and find some really top talent to supercharge the business. So if we can, so in terms of preparation and investment readiness, this is often a topic of conversation, I guess, amongst, you know, finance directors and across boards, because and we invest in SMEs, so it's a journey, and the SME isn't the finished, polished article at the beginning of that journey. These are owner-managed businesses that are doing something really special, and that they have, you know, they've got great customers, great suppliers, great proposition, great product, a good position in the market. But ultimately, they're probably either taking it to the level that they're able or the level that they want to take it to. And then it's bringing in additional liquidity or a wider management team, etc., to take it to the next stage of growth. So I guess one thing that's always super helpful for us in our seats when talking to you guys, when you're out kind of talking to the business owners, is it's just having it on their radar. You know, what are they looking? Oh, our lights have gone off. What are they looking to achieve? Are they looking to stay on in the business? Are they looking to exit on this round? Are they wanting to raise growth capital? Are they just wanting to step back a bit? Are they not wanting to be the person at the end of the phone 24/7, 365 days a year? Because we totally get that. So yeah, it's having private equity as an option when you're talking to them in the event that there's a funding event or that there's an, you know, that they're thinking about what next. It's having private equity on that list of potential options and how we can help. We obviously always need kind of up-to-date financial information, so management accounts, and I know you guys will be working with your businesses to produce the information, and not all kind of owner managers. As I say, it's a journey. At the beginning of the journey, it's not produced monthly within, you know, in a timely fashion, or it's not something that they feel they need to run the business. I guess that changes obviously as you go through a process, but it's always helpful to certainly have up-to-date financial information. And in terms of positioning the business, so there's a lack of or a reduction in risk. It's never a lack of risk because it's always measured, but it's, you know, in terms of customer or supplier concentration risks, risk of substitution, you know, the value of the proposition, it's all of that stems into, you know, the journey that the business goes on onto its next phase of growth, really. And it's so, and what I would ask of you guys is on those, you know, when you're having the conversations with owners in terms of how are you going to grow? Have you thought about raising money? If you were to raise investment, is it, you know, is it investment into the business? Is it cash out? You know, is it time to, you know, how about taking some cash out, whether it's a minority equity release or whether it's actually I want to retire, but I don't have a team. That's fine. You know, we can help build them. So it's really the flexibility of the capital, I guess, that private equity can bring, just to bring that additional dimension to those vendors or those kind of business owners when you're talking to them on a regular basis. And it goes without saying in terms of resource, you know, going through any transaction is hugely time consuming for everyone. And it's always the FD, it's always the finance director that gets pulled through the mill, really. And so, yeah, it's providing that support so that actually, you know, the information can go out in the granularity it needs to, etc. And it's just supporting management through that process. In terms of our investment strategies and what we can do, so as I kind of touched on, we have very flexible, so within that sort of 1.5 billion of assets under management, we have some really flexible capital, all the way from some, you know, investing in a business that's maybe making kind of 500,000 to 1 million of revenue and isn't yet making a profit, all the way through to, you know, making 4-5 million of profit, and is a really established business. We also can provide private credit funds. So Reward Finance, for example, we are a lender to lenders. They have really quite sizable facilities from us. You know, it's another thing in terms of flexibility of capital. Buyouts, we can provide up to 15 million. Again, it's all sectors and stages of transactions. So that's minority equity release. So where someone's potentially just wanting to take a bit of cash out of the business and bring an investor in, all the way through to majority sales and retirement sales. Growth capital, again, it's, but yeah, that's really, so 𝗲𝗂𝗃 is a local name that lots of people will know. And that transaction, for example, was a combination of cash out to shareholders at the time and cash into the business to open new sites. Performing really nicely and works really well. So yeah, I think what I would say is if, you know, if you're working with a growing company and it's thinking about doing something, you know, private equity can be really flexible capital to work with the vendor to kind of accelerate the pace into the plan. So it should definitely be on the list of, you know, things to talk about. In terms of how we work with our portfolio, and I think one of the biggest things we can do is connect some of the really kind of top talent that we have, both within the existing portfolio and with portfolio that, you know, kind of, or deals that we've exited in the past. Because that sort of 3.5-4 times return, it's getting the right people. That's driven by ultimately getting the right people in the right roles. So, you know, an example of this could be, so we had an investment in 𝗲𝗟 Street Food, which is an Indian street food restaurant, which we exited that last year. And the chair we brought to the business, and it's always kind of, it's our appointment, but we do this, you know, mutually with management. So we'll provide kind of a short list and then we work through them to find the right person to fit the strategy. But ultimately, the person we appointed there was the founder of Café Rouge. She's on the board of Deliveroo and she kind of ran the UK's largest chain of pubs in the 80s. So some real top talent that arguably, you know, what was a 3-site restaurant chain wouldn't have been able to attract, I think, without our help. So, and it can add real firepower because they have the scars, the T-shirt, the black book, they know what to do, and the definitely what's helpful is no, not what to do. We're very much a regional investor, so getting out and talking to you guys from our regional office base is huge. Ultimately, you know, we're deploying regional capital and our funders are very interested in things like quality employment at scale. So creating and protecting, you know, high quality jobs locally in the region. And we are, you know, we're very much a local, we have the international infrastructure and benefit from kind of being a big asset management company, but very much deployed locally. We are very passionate about ESG. And I think part of that is, so we are, and we always have been, we have strong heritage in sort of green energy, for example, in creating local employment and protecting local jobs, investing into health, research and development, etc. And we've spent a lot of money investing in a Salesforce platform, which has hundreds of ESG KPIs that we monitor at individual portfolio company level. So each individual company that we invest in probably have 2 or 3 targets which we'll monitor, and they'll be very much tailored to the business at hand. And it could be around deploying an apprenticeship scheme, for example, which we have on one of the boards I sit in 𝗕𝘂𝗵𝗃, which is an engineering business, and that's been kind of designed and led by 𝗵𝗏𝗄𝗏 College, for example. Or it could be working with certain kind of offshore energy providers and green kind of renewables for 𝗕𝗂𝗶𝘃𝗄𝗏 business that we invested in recently as well. So it's very specific, but it's also synergistic with value. It's a journey. We don't expect companies to have polished environmental, social, and governance kind of policies at the point of investment. But what we do is we help the business, and we work with the business and the board to really kind of focus on how certain things can be done better. And we're really passionate about that. Another one is kind of females on boards, and representation being balanced, really, which again is synergistic with value. We all see it goes to returns ultimately as well. And then what I've done is we have over sort of 200 or so portfolio companies, and Sue could probably flick through the next 3 or 4 slides, and actually it just shows you some of the companies that we've worked with. So as I say, locally, we've invested in 5 new businesses this year. One was a mobility scooter retailer. That was a retirement sale for 2 founders who started the business 20 years ago, headquartered in Scunthorpe. And the growth there will be in new site openings and potentially opportunistic bolt-ons as well. Another investment was in an industrial components business up in Hartlepool, again founded about 20 years ago, and we bolstered the team at the time of doing the deal. Another one was in a ships chandlers business over in Hull. We brought a new CEO and chair in, and the founder stepped into a commercial director role, but still wanting to stay in the business, just not be the person at the end of the phone every day. And to grow the team to kind of break the revenue ceiling that it hit a couple of years ago. Another one is slightly different. It's a pre-revenue quantum cryptography business. So a Leeds University spin-out. That was a co-invest with Northern Gritstone, slightly different, world-leading IP. And then the last was the sale of a subsidiary of a listed company. So that was Martech from 𝗵𝗿𝗃 Group, and that was a divestment down in Rotherham. Full management team in place at the time of the deal. And there it will be an investment into tech and new product development, really. But that's a kind of maritime supply business. So there are lots of ways, lots of sectors that we've invested in, lots of different types of deals. Some good examples of where I think private equity can work and be quite flexible to help build teams. Do things like site rollout with 𝗲𝗏𝗃𝗁𝗃, for example, which we invested in about 4 years ago. lots of examples of tech companies where they've raised growth capital to take a proposition either regional to national or national to international markets, and then help them establish how they do it in the safest way and the kind of the slickest way possible. I think one of the overarching messages is kind of getting the right chairs, getting the right people involved, and just working with. It's about working with kind of the local deal connectors, so the likes of you guys who are out there talking to businesses that are growing, that might be looking at an event at some point in the future, or would benefit from a fundraise of some sort. And we're always happy to have that, no obligation conversation, 𝗕𝗂𝗶𝘃𝗁. We're all local. We've got the office here in Leeds and an office in Newcastle, but we are very much a local team. To work with local businesses, and it's great that you've joined this, for example, to spend some of your time to listen to a bit about what private equity can do, specifically about what we do at Foresight, and how hopefully we can work together to unlock some of these opportunities in the market, because it's great, quite frankly, to support local businesses, which is, I think, what we're all interested in doing. I think, Sue, kind of handing back to you, would it be helpful? Sorry. There's a couple more slides which I'd forgotten about. This just talks about some of our notable exits of late. I think it talks to some really good financial performance, which is very compelling, I think, when you're talking to business owners, because ultimately they want to talk to someone that's going to drive value, particularly if they're staying involved a bit. But also, you've got a really wide sector play, and different types of businesses that ultimately do different things, but all have the same growing pains. So face the same challenges, really. I don't know if there are any questions, Sue, or if there's anything that you think would be useful to chat through in more detail.
Sorry, I'm just stopping sharing those slides. Well, I've got a couple of questions. Perhaps you can answer those, and we'll have a look in the chat while you're doing that and see if anybody's asked something. And really, I think most of the people who are on this call will be finance professionals, some of whom may have worked in a private equity invested business, who may think that, it sounds so exciting, and there's a lot of upside for them to be involved in be a shareholder and a stakeholder in that business. But private equity investors have quite a tough reputation for what they demand from their teams.
Yeah.
Do you think that's a deserved reputation? And would it be a bit of a shock to the system for people to leap into that environment, or what should they do to get themselves ready to take on that level of role?
Yeah, okay. And I think there can be huge upsides, because every deal we structure, and every deal most private equity structure, will include an options pot for management, because ultimately we're backing a management team, which is very much includes the finance director, or the person in charge of the finance function. So they have a stake in the business, and they might, you might not have had one before the deal, but ultimately private equity are about backing management teams to align interests. So absolutely everyone should have, incentivization to grow the equity value of the business. Is it tough? I think, you can't dispute the fact any process is. And so that investor readiness piece, in terms of, it doesn't have to be perfect, but kind of up-to-date financial information, and diligence can be tight. Diligence is, it's a full-time job as well as doing the day job.
Yeah. But
it's for a short period of time. I think it positions the board really nicely. With effectively, there'll be things that come out of diligence, both opportunities and things, that the business can capitalize on, whether it be new customers, new markets, new processes, new policies. But ultimately then it's kind of settling down after that into I'd like to think that not all of our FDs are burnt out, that's for sure. And I think after a while, it is more sort of business as usual. Obviously, if there's an acquisition or, new site openings, ultimately, I suppose you're working in a growing company. And there'll always be the challenges that come with the growing company. We usually put a bit of bank debt into our deal. So stakeholder management with the bank is really important for us, but we're very conservative at Foresight. So I think, some private equity get a bad reputation potentially where they kind of put lots of bank debt in. It makes the FD's job super hard, but actually we're at the other end of the scale there. We do put some in, but certainly not a lot.
Okay.
So I would say it's one of those environments where if you want to shine and ultimately be the kind of creator of your destiny and the master of your destiny, then it is absolutely the right place to be.
Yeah, thank you. Now, you've shown on the few of the slides exits for your investments. So is that almost, are you already, when you're looking to invest, almost thinking what that next stage exit will be and how easy that would be and what would be a typical second stage exit for a business?
Yeah, and I think ultimately, because when you're investing in a business, you need to know private equity normally invests on a 5-year horizon or an assumed 5-year horizon. Sometimes it's a lot quicker, sometimes it can be longer. And part of that is the type of capital. So venture capital trust, so growth capital into younger businesses. It's evergreen, so there's no time horizon. But things like management buyouts, for example, they tend to be on an assumed 5 years, albeit, Mowgli, I think we were actually thinking of exiting that before COVID came along. And you know what? That certainly wasn't the right time to sell the business. Yeah. Things change. But yes, I think direction of travel. What's everyone working towards? Who are the likely buyers? Who is the likely buyer for the business, and therefore how do you maximize value, and how do you maximize your buyer pool as well? Is it do you have a kind of group of businesses that actually would be easier to market individually, or are they strategically, is it important to grow one area more than others? There are lots of ways. Is it an international? Is it trade? Are we selling to private equity? Because we often sell to private equity, but then we'll often sell to trade as well. So I think because we're a volume investor, so we have some really good experience, and I think it helps actually it definitely helps maximizing value by having private equity on the board on the way out. And on the journey, because ultimately that's kind of where our experience lies.
Okay, thank you. And I think you mentioned some of the funds that you're managing are basically public pension funds or West Yorkshire Combined Authority, which obviously slants quite a lot the sort of businesses you're investing in because of their objectives. Have you got some examples where you might rule something out for that reason, that it's, you mentioned sustainability. Are there any other sort of areas you would be very focused because of those funds?
Yeah, so our investors are really passionate about creating economic stimulus and growth and activity in their regions.
Yeah.
If you look at, I think something like 90%-ish of the private equity capital that raised is invested within a pretty small radius of London. So there isn't much that makes its way up to the north, and there certainly isn't much that'll make its way into an industrial estate in Hull or Teesside or, Batley or somewhere like that, because usually the private equity house will have the office in London and then they'll kind of service the UK, if that makes sense, from their central London office. Whereas we're all about being the local investor. So yeah, we have and we will always look at deals kind of on a it's still ultimately, is it a growing company? Is it doing something that's really compelling and clever? But I think the time we spend with local deal connectors kind of gives us a really good deal flow of what are genuinely regional opportunities that the London investor wouldn't see. So there's sort of 1 to, or even kind of 500,000 to 3 million profit businesses. You know, we have that chat with the FD or the non-exec or the advisor, and we spend a lot of time working with people who hold good relationships with really good businesses. And I guess that's what our investors want us to do. You know, so West Yorkshire Combined Authority, we completed a co-invest with Northern Gritstone earlier this year into a, so it's a quantum computing business. And that's 5 people, not generating any revenue yet. I think the funding was about 2 million. And this is quite niche in West Yorkshire, but world leading IP, we hope.
Yeah.
But yeah, we have seen that deal. If we weren't here, absolutely not.
Yeah, that's great.
And actually, if you were to look at most of the deals we do, they don't come in from sort of traditional corporate finance advisors. They come in from all sorts of different business connectors, because we're out there having coffees with lots of people all the time to find out what's going on in the market. And yeah, our funders want to know, you know, how many, what's the rate of employment like? You know, what KPIs are we going to track that actually are, you know, strategically aligned with what they either, you know, in terms of the kind of West Yorkshire Combined Authority, for example, what they're trying to achieve.
Yeah. And I think we were chatting earlier before that we went live about you just got through a competition to talk to a business. So I find that quite interesting. So how are you fighting off other potential investors and convincing the company actually that you need to be the right partner?
Yeah, and I think, so we've been around since the 80s. So we are long-standing, have a solid track record. We have delivered some really good financial results. And it's not through financial engineering, kind of asset stripping. It's through spending time looking for those kind of unpolished diamonds in industrial estates or business parks or whatever it is that other people don't do. And then it's working with the management team to really pull the right talent in. And I think, yeah, so it is tough and it is competitive, but I think we have an excellent kind of ability to bring in some really top talent that can supercharge growth. And we have a great track record, both financially and, you know, you could talk to lots of portfolio companies. And I think, you know, in terms of private equity houses to work with, you know, we have some really good dynamics with portfolio companies. Good.
Laura's asked, what's the most common deal breaker when looking at investing in an SME?
Sometimes I would say sometimes value expectations. If an owner might have what we would see as unrealistic value expectations, sometimes so they might think their business is worth, you know, 10 times profit. And we know, based on everything we're seeing in the market, that actually businesses, you know, of that size in that sector or whatever are actually being invested in at, you know, 6 times. So I think unrealistic value expectations, but actually, usually for every 100 businesses we see, we probably invest in 1 to 2 of those. So the bar is high, but you know, actually, it's usually either a difference in value, but there are structuring methods you can use to bridge those gaps in terms of using earnouts and things like that, and ratchets. Yeah. But I would say yes, and I think when we do lose deals, it's usually because actually they have a change of heart, and you know they don't want to sell their business. But yeah, we do see some competition, but value expectations, I would say, are one of the bigger deal breakers.
Yeah. And what's the situation where it all sounds very positive? What happens when the business doesn't perform and things sort of start to go a bit off plan? What's Foresight's tactics in those situations?
Yeah, and this happens, right? The world isn't perfect,
Yeah.
and you invest on a kind of a strategic plan that everyone buys into at the time of the deal. That's what the board signs up to, and that's what we as investors kind of sign up to. But things happen. COVID happens, energy spikes, geopolitical conflict, the budget change with, increase in minimum wage and national insurance. These things happen and they do impact performance. So it's having that communication and dialogue around the board table. What are we going to do about it? And it's certainly not Foresight kind of directing. It has to be collective. It has to be owned by management. It has to be, and ultimately they will know the sector and the business better than we do. The chair is instrumental in those conversations in terms of what they're seeing in the market as well. Their role is really important. So yeah, things can go wrong, and occasionally, yeah. So things go really wrong, but that's the nature of business and free market economies and cyclical economies, right? But what I would say is that I think pointing to our financial track record, which is upper quartile, it's the approach that delivers that, and it's the collaboration of working with management, making sure management are incentivized, everyone's pulling in the same direction, very clear. So monthly board meetings, timely information, constantly kind of, challenging what's happening in different areas. How are we going to grow? Where's the gaps? Who do we need to recruit? It's the constant kind of challenge amongst board, the whole board to deliver it, really.
Thank you. Simon's asked a good question. Founders have traditionally made all key decisions. How do you find they adapt post-investment, and how do you approach this with them sort of pre and post-investment?
Say that again.
Culture piece we were talking about.
Yeah, and it is. It's very different and we do lots of retirement. We invest in lots of founder-owned, owner-managed businesses. So one person's like, that's it, their decision has been final. What they say goes. They've never had to consult with anyone else. And it's a journey. And it's just knowing it's a journey at the beginning. And particularly when you're bringing in a new management team. So if you've got a founder that wants to stay on in a new capacity, and ultimately everything's in the head, all the special stuff, it's not written down anywhere, how they can achieve the margins, what the relationships with the customers are like. We'll do all the diligence in the world on the way in. And we are fairly traditional when it comes to kind of our approach to diligence. But ultimately in an owner-managed business, there's so much stuff in the owner's head. And it's just working with them. And, whether you've bolstered the team and you've got a new CEO, for example, and then the founder's a commercial director reporting into the CEO. These are really tricky dynamics, and it's about everyone wanting to do the right thing for the business ultimately. And change doesn't happen overnight. So there has to be an acknowledgement on all sides that whilst change has to happen, we don't expect it to happen overnight. So it's about having plans to de-risk, if you like, that culture change, because the culture will have to change. Usually in an owner-managed business, it's an autocratic, or it can be an it depends. It might not be, but at one end of the spectrum, that's kind of the hardest culture to change. So there has to be an acknowledgement on all sides that it will change, but then it's the plans, the steps, the board meetings, town halls, the feedback from everyone, maintaining your staff so you're not driving staff churn, but you're still delivering the results. It's really tricky, but it's just ultimately all working together with really clear communication. And working, we're all human at the end of the day. It's just working together as a team, and it can be really tricky. That's one of the trickiest parts of my job, actually. Portfolio management. So as an investor director, we find the deals, we transact the deals, and then we sit on the board as investor directors during the life of the transaction, and then we manage the exit. And actually the early stage of the portfolio and investor director role can be the trickiest, because it's getting the right people in the right roles working together. So yeah, it's a really good question. It's the softer stuff, obviously, that's usually the hardest.
Yeah. And I don't want you to give away anything in confidence, but how many boards do you sit on now as part of your role?
So I sit on 3 boards. We normally sit on maybe up to 5. Kind of, if you sit on more than 5, you tend to be a bit too busy on portfolio to do new deals. So I sit on 3 at the minute. I did sit on another one, but we exited it last year. So I sat on the board of Fresh Relevance too, but we sold to �11, the name listed PLC.
And who's your favourite? No, you shouldn't. Who would be your favourite and why? What sort of business would that be? Who's your favourite child? You'll have to say that.
It's, as a mum of 2, it is like having an extended family. I think it's more about it's taking the really good bits, because all businesses will do things differently, both by sector, by culture, by experience, by board roles, by board experience. And it's just taking the best out of each and sharing, getting them to share, not making the same mistakes, because that's, a big pet hate. Mistakes are sometimes inevitable, but we shouldn't be doing it twice. And that's across boards as well as, and so we have best practice sessions. So if you think we have sort of 200, across sectors, there's a lot of bird's eye information there. And it's just about how slickly can we share the information, join up some of those dots.
Yeah.
But yeah, the ones that are basically smashing the targets and generating. That's always good.
Yeah, I bet it is. Okay, if we've no more questions from the people who are watching, I think we'll draw the session to a close. Just want to thank Tavia again for her time in preparing for today and for offering to help us out and share her views on Foresight and the private equity world in general. The webinar will be available to download and watch again. Particularly if you've not been able to join us, that'll be available for people who've registered. I suspect you might be contacted for a few more of those coffees, Tavia. So
yeah, good too. That sounds great.
From the financial community. But yes, thank you so much again for everybody for joining us, and for Tavia for her time today.
Thanks, Sue.
Thanks. Bye-bye.
Thank you.